The global crypto market is sitting at $2.5 trillion today. One analyst just went on record saying it reaches $100 trillion by 2032. That is not a price prediction on one asset. That is a projection of the fastest, largest accumulation of wealth in all of human history. And for the first time, it is happening in the hands of retail investors who got in before the institutions. Today, we are going to wrap up every major institutional development happening around XRP right now. CME, Schwab, Mastercard, the ETF supply absorption, and a breaking announcement about RLUSD that changes the entire multi-chain picture. This is XRP verified. Let us get into it. Let us start with the macro picture because the framework matters before the details. Ral Paul described the current setup in a way that is worth understanding precisely. You have a cheap entry point. XRP is down significantly from its all-time high. You have accelerating use cases, institutional partnerships confirming every single week. You have trillions of dollars flowing into stablecoins, running at a rate of approximately $100 trillion annually, all of which generates underlying demand for blockchain infrastructure. You have the AI agent economy coming, agents that cannot open bank accounts and will need blockchain payment rails to transact. You have the business cycle generating earnings that eventually get recycled into speculative and alternative assets. And you have fear and greed at historically low levels for an extended period, meaning retail sentiment is at the exact point where institutional capital has historically made its most significant allocations. That combination, cheap entry, accelerating adoption, institutional infrastructure building, and maximum retail pessimism, is the setup that serious investors recognize as rare and significant. Ral Paul went further and said something that deserves careful attention. This is the only asset class in history where retail front-ran the institutions. In every other major asset category, real estate, stocks, private equity, the institutions got in first, built the infrastructure, captured the returns, and then sold the product to retail at a premium. In crypto, retail discovered it first. Retail built the community. Retail held through the uncertainty. And now the institutions are arriving to build on top of the infrastructure retail already owns. That dynamic has never existed before. And if the projection of $2.5 trillion growing to $100 trillion by 2032 is even partially correct, the people who positioned in XRP during this period of maximum institutional pessimism and minimum retail enthusiasm will look back at this moment as the obvious opportunity it was. Now let us talk about the institutional access infrastructure that has been built in recent weeks, because the scale of what is now available to professional investors around XRP is genuinely historic. CME Group, which clears more than $1 quadrillion in derivatives annually, now has XRP futures and micro XRP futures settled to the CME CF XRP dollar reference rate, available 24 hours a day, 7 days a week. Bitnomial has live regulated XRP futures. Charles Schwab's Thinkorswim platform, used by 16,000 financial advisors managing $12 trillion in client assets and serving 10 million clients, now offers XRP futures with contract sizes of 50,000 XRP and 2,500 XRP. Institutional investors, family offices, pension funds, and individual clients of those 16,000 advisors now have a regulated instrument inside the most trusted retail brokerage platform in America. That is not a crypto exchange. That is Charles Schwab. The institutional access point for XRP has never been broader, more regulated, or more integrated into mainstream financial infrastructure than it is right now. Now let us address the ETF supply absorption, because the numbers this week are accelerating in a way that deserves serious attention. We are approaching 1 billion total XRP locked inside US spot ETF structures. Grayscale's head of research went on record projecting that XRP ETFs are on track to absorb 5 to 6% of the entire circulating supply, and explicitly said a higher number is certainly possible. 1 billion tokens approaching locked-in ETFs, 5 to 6% of circulating supply absorbed. These tokens do not sit on exchanges. They do not participate in normal market trading. They are removed from available supply and held in regulated long-term custody. And this is happening at the same time that institutional demand is expanding through Schwab, CME, Mastercard, and a growing list of global banking relationships across UAE, Australia, the EU, UK, South America, Mexico, Canada, Japan, and beyond. Supply contracting, demand expanding, both moving simultaneously in opposite directions. Now let us cover the Mastercard development because every month brings a new announcement connecting Ripple and XRP to Mastercard's infrastructure. And the scale of what Mastercard represents deserves to be stated clearly. Mastercard processed approximately $9 trillion in payments last year and generated $32.79 billion in revenue. If Mastercard uses XRP to facilitate even a fraction of that $9 trillion in payment volume, the daily flow through XRP ledger infrastructure would be transformational. Mastercard has already named RLUSD and the XRP ledger in its global settlement architecture announcement. JP Morgan, Ripple, Banking Circle, and Tempo recently shared a stage in Amsterdam, debating how far banks will go to use public blockchains. That panel happening publicly, with JP Morgan and Ripple in the same conversation, would have been unimaginable 3 years ago. The institutional conversation has moved from whether to use public blockchains to how far to go. Morgan Stanley's head of digital assets, Amy Oldenburg, said something this week that provides important context for the timeline every XRP investor should be working with. She said tokenization is not a 2026 or 2027 project. It is the next decade's project. A multiple-decade-long institutional commitment to digital asset infrastructure. The institutions are not rushing. They are building permanent infrastructure, compliance frameworks, custody solutions, regulatory approvals, technical integration that will run for decades. That means the full utility price for XRP is not going to arrive in a single dramatic week. It is going to build incrementally as more corridors activate, more institutions integrate, and more volume flows through the ledger. Investors who understand this timeline and position accordingly, rather than expecting overnight transformation, are the ones who will hold through the volatility and capture the long-term structural returns. Now let us cover the breaking announcement that came out this week that changes the entire multi-chain picture for RLUSD and the XRP ledger. Ripple officially launched RLUSD on the XRP EVM sidechain. This is a significant technical development that most people have not fully absorbed. The XRP EVM sidechain is a blockchain that supports Ethereum smart contracts, meaning Solidity developers, MetaMask wallets, DeFi applications, lending protocols, and tokenization platforms all work natively on it. What Ripple just did is make its regulated stablecoin available to the entire Ethereum developer ecosystem while remaining connected to the XRP ledger. Ethereum developers can now build with their familiar tools while accessing XRP ledger infrastructure. RLUSD can now move across chains through Wormhole integration, connecting to Base, Inkchain, Optimism, Unichain, and the XRP EVM sidechain, which itself connects to 35 to 40 additional chains. That means RLUSD is now effectively accessible across the entire multi-chain ecosystem, not just the XRP ledger. And as RLUSD becomes available across these environments, XRP increasingly serves as a complementary asset for liquidity, settlement, swaps, collateral, and payments across every supported chain. This is not XRP competing with Ethereum. This is the XRP ledger ecosystem connecting to Ethereum's developer base and DeFi infrastructure, expanding the total addressable market for both RLUSD and XRP simultaneously. The Ripple Treasury connection to FedNow is also building in ways that deserve attention. Ripple Treasury operates through ClearConnect, which ties directly into FedNow for real-time payments and treasury operations. If Ripple lands a full Federal Reserve master account, RLUSD would sit directly at the Federal Reserve. The Fed systems in the United States process between $5 and $7 trillion per day. The XRP ledger and RLUSD are being positioned to handle a portion of that volume. The master account application is pending. The ClearConnect FedNow integration is operational. The infrastructure is in place. The regulatory approval is the remaining step. Bloomberg confirmed this week what the data has been showing for 2 years. XRP delivered the highest returns in crypto over the last 2 years, approximately 65% annually, while operating in an environment of elevated volatility. Most cryptocurrencies generated negative returns over that same period. XRP separated itself from the broader field as one of the strongest performing major tokens in Bloomberg's institutional dataset. XLM was second, Bitcoin third, Ethereum was below the benchmark. And this outperformance happened while XRP was dealing with regulatory uncertainty, a recovering legal situation from the SEC case, and a broader market environment that was challenging for almost every digital asset. The XRP thesis is not theoretical. The historical return data confirms it has already delivered exceptional performance, and the institutional infrastructure building right now is stronger than at any point during that 2-year window. Let me bring all of this together. Ral Paul projects the crypto market grows from 2.5 trillion to 100 trillion by 2032, the fastest, largest wealth accumulation in history, with retail positioned ahead of institutions for the first time. CME, Schwab, and Bitnomial have created the most comprehensive regulated institutional access infrastructure for XRP in history. ETF absorption is approaching 1 billion tokens, with Grayscale projecting 5 to 6% of circulating supply locked in ETF structures. Mastercard's $9 trillion in annual payments and JP Morgan's banking infrastructure are both actively integrating with Ripple technology. Morgan Stanley confirms tokenization is a next-decade project, validating a multi-year positioning timeline. RLUSD is now live on the XRP EVM sidechain, connecting Ripple's regulated stablecoin to the entire Ethereum developer and DeFi ecosystem across 35 to 40 chains. And Bloomberg confirms XRP delivered 65% annual returns over 2 years, outperforming every major digital asset. The infrastructure is built, the adoption is accelerating, the supply is contracting, and the price has not caught up yet. Stay informed, stay patient, stay positioned. Subscribe to XRP Verified. I will see you in the next one.